People are coming because at the end of the day, they have seen what has happened from March 2020. And a lot of the retail investors, there are a lot of new time people who've come to, new age investors who've come to the market, right? They've not seen cycles, they've not seen a meaningful correction. Does that bother you at all?
No, it doesn't bother me because the color money is same. Whether you put it as a professional or some new guy puts it. The issue is that overall aggregate money, where it is going. Is it going into the building of the infrastructure? Is it going to build the corpus? I mean, is it a primary issuance or is it a secondary? Like ITC BAT taking away, say, $3 billion or $2.5 billion. That doesn't help that much. Or Indigo promoter taking away $1 billion. That doesn't help. Of course, it is necessary part of the capital market, but disproportionate amount should go into the primary issuance. So like a telecom company issuing say 50,000 crores worth of bonds or equity and that being subscribed. What they will do, they will go and put up new towers, new, that will actually spur the economy.
You know, it's really interesting that you brought up some of these huge block deals that have happened, and a lot of them have happened. I think 2023, we saw massive blocks coming in. It's continuing in 24. And this is also a question that comes up because at the end of the day, because of the retail revolution, a lot of the buyers are mutual funds. So, I mean, I am buying at the end of the day when maybe a promoter is selling or maybe a very sophisticated PE investor is selling.
They also have a right to sell.
They have a right to sell, absolutely. But is there any reason to worry because they are supposedly smart insiders
nothing to worry.
and they're selling?
Market phenomenon.
Okay.
Surabhi, you must understand. If you raise the prices, supply will come. Asman se supply hai. Whether FIs sell, promoters sell, block deal happens, new issuance come, supply will come. So first 3 years, we saw the boom in the demand side because of this inflow. Now you see the power of supply.
But does that mean that maybe for an interim, there's a bit of a top in the market?
Yeah, don't become too topish, this, that.
Achha.
It's a part of the game. See, if you're playing football, I mean, if one guy is Manchester United, other side is Motilal Oswal team, what will happen? They'll just go and keep hitting. There has to be supply. Supply will come, and that is the healthiest part. Okay. That's the real role of the stock market. To supply secondary liquidity as well as primary liquidity. So my only wish is that liquidity which is taken away from the market, that should have a lot more primary component, like where regulators have said T+3 for the listing. So they are making every single effort to see that money is being raised very quickly in the economy. So that entrepreneurs who are seeking to come in, say typically for the stock market, who comes? The guys who have about say 300-400 crores turnover, 40, 50, 60 crores, 100 crores profit, they only come for the listing. And they have a huge aspiration. A hospital company who has say 1,000 rooms, he wants to set up 2,000 rooms. Okay, come, we'll give you 2,000 crores, 3,000 crores, and you set up 3,000 rooms. And that is what is the chain effect in the tourism or infrastructure or whatever. So that, so what happens is the equity boom has the wealth effect in the system. And wealth effect has two things. One, it leads to massive consumption boom. Consumption hota hai, then you get the GST. Government gets the tax. Government gets the tax, they are able to spend in the infrastructure much more aggressively. So that's one part of it. Second, if you have wealth effect, then there is a boom in the real estate.
Absolutely.
So the entire real estate,
and we're seeing that
all over the country, whether it's land, building, flats, houses, everything is 50 to 100% up. That has its own momentum in the economy. So all this put together, I don't know, many more effect would be there, but clearly the consumer confidence is very high, moral is very high, employees are very happy with the ESOP being priced well. So clearly there is a lot of effect in the economy, and that effect from the wealth is going to be added effect apart from whatever capex is doing as per the general budget. So combined these two are going to give us 7 to 8% growth rate, which is what the economists are not getting. Economists are saying 6.5. I mean, they are very reluctant to say even 7. All our economists are below 7. But actual numbers is about 7.5, 8. I'm telling you, every single guy will be shocked. If the market remains, market goes from say 22,000 to 24, 25,000 in the next 12 months, we might cross 8% growth.
Thank you for watching CNBC TV 18 and do follow us on all our social media platforms for news, updates and more.